This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Well, as this recession rolls on, with many companies posting bad earnings, the online film rental company Netflix actually posted a fourth quarter profit rise of 45%. As if that weren't enough, the DVD rental entity also says they're experiencing a subscriber increase while spending less money, yes, less money, on obtaining those new customers. Here to discuss all of this with us now is Tracy Reinick, our value stock analyst, and Mike Vodicka, who analyzes momentum stocks for us at Zacks.com. It's kind of an interesting turn of events for this company.
It is. But it's not really surprising because they've been doing well the last couple of quarters, so it's not like it came out of the blue. But it does show that some of their strategy is working, and they're able to take market share away from their competitors, which is Blockbuster and used to be Walmart. I mean, I don't know if you remember back in the day, a couple of years ago, Walmart started their own online DVD or mail order DVD, and there was this big, issue that Walmart's so huge and they have the distribution, they're going to be able to defeat a smaller company like Netflix. Well, here we are all these years later, and there's Netflix adding, a huge amount of subscribers. They added 26% new subscribers over 2007 in 2008, and that's just tremendous given what else is happening in the entertainment industry.
Well, what I find interesting is not so much the earnings, and by the way, they beat the street.
Right.
We should say for this last earnings report. What I find interesting is that the churn rate, which measures the amount of subscribers who left the service, being virtually unchanged or very, very little changed.
Right.
Quarter over quarter. And we were always told that it really costs more money to go out and obtain those new customers. And apparently, in this case, it didn't.
Right. They had about a 4.2% churn rate, which was up a little bit from the quarter before, which was 4.1. But it's been basically flat, as you said.
Yeah, a tenth of a percent.
Right. But they are able to get their subscriber per costs down. And some of that is because they have this new technology out there with the streaming video. Mm-hmm. So they're able to bring down some of their costs in terms of mail, postage, that kind of thing, because they're able to stream it right onto people's computers, or because you can order this box now that you can attach to your television that they stream it directly in. So they're seeing lower costs on that. And I think some of it is also from the marketing aspect of it too. They're seeing a little bit lower costs on that because I think the brand name is just getting more well known, and they're able to take out some of their competitors like Blockbuster. I mean, Blockbuster's still in the business obviously and competing, but
right.
With numbers like this, you're seeing that Netflix is taking away a lot of market share there.
So there's value here?
Yeah, the stock is trading, it's not super cheap, but it's about 18 times forward earnings right now, which is, not horribly expensive for given what they're doing. I mean, they did see a 19% rise in revenue this last quarter. Mm-hmm. So, they have the numbers. They, guided decently for the first quarter, and they're going to see bigger subscribers for the first quarter, and they're anticipating, who knows what's going to happen, but they're anticipating on the high end, a 20% increase in subscribers for 2009. So, those numbers support what we're seeing with the PE ratio. And as you said, they did surprise on earnings this quarter, but they've surprised 3 out of the last 4 quarters. So that's a pretty good track record.
Michael, is the chart reflecting the same consumer embracing of this company? Is the stock price, is it reflected in the stock price?
Yeah, absolutely. I took a look at some different intervals of charts here. The first thing I looked at was a longer-term chart, and what we've seen from Netflix, which is very much a reflection of the fundamentals, is long-term sustained strength. And what you see over the last about 5 or 6 years here is this share price continually creating higher lows. I mean, there has been some short-term or some volatility on a shorter-term basis, but the macro-level trend is definitely up. For example, share price is trading $2 to $3 in 2002, and then the next short-term low after that is $9 in March of 2005, and then the next short-term low after that is $16, and then the next short-term low after that is $18. So it's been a pretty nice ride higher, and that's really what you get when you invest in what I think is an innovative company here. Netflix has been around for 10 years, and their model was more progressive, really, than go to Blockbuster and rent a movie. It's like, we'll send you a DVD.
Right to your mailbox.
That's right. And then
convenience, that's what they brought out to everybody.
Definitely. And then as opposed to resting on their laurels and saying, hey, we think we have a great model, as they continue to look forward and say, well, what's the next step in our business? And that's what Tracy was talking about when she mentioned their online subscription, where you can actually download video straight to your PC. I'm sorry, not to your PC, but to your television, or maybe your PC too.
Right.
On a shorter term basis, too, here, the share price did trade lower recently, but then it rebounded just in the last couple months. We've seen the share price bounce from $18, and now it's trading between $35 and $36, so it's almost doubled just within the last 2 months. And again, good companies will rebound, they will bounce back, and they came through with a nice quarter, which helped them out a lot.
I found it interesting that the company's board recently authorized spending just under $200 million to buy back shares, which I don't know, is that good or bad for this the stock price?
Well, I mean, that's pretty bullish right now, considering, they're choosing to use their cash to buy back their own shares in this kind of environment.
Right.
I think
what could be the strategy there, though?
Well, hard to say, but I mean, they obviously believe in their business model. So, and they're trying to send out a message that things are going well. I mean, they did say that they're seeing the increase in subscribers because of this economic environment, because we're seeing people go out less. They want to sit at home, sit on their couches, and that's spurring a lot of demand too for their business. Mm-hmm. So, the stock buyback, I think, is just kind of sending out a message right now that that they value what's going forward with their company and what they see going on in the future.
All right. Do either of you or anyone in your households own this stock?
No.
No.
And what is the ticker symbol?
NFLX.
All right. Other analysts say that this Netflix news reinforces for everyone the vitality of the U.S. entertainment industry and the public's love of movies, even while in the grip of a nasty recession. With Tracy and Mike, I'm Terry Ruffalo.